So this is a scratch trade. Let me explain to you what exactly is a scratch trade. Well, a scratch trade is a trade where you make an attempt, or you make one or two or maybe three attempts to buy a stock, but the stock just doesn't perform. If you read Jesse Livermore's book, How to Trade in Stocks, the first chapter of the book says that wait until the market confirms your opinion. So, for example, let's say there is a stock and it looks very good technically, looks very good fundamentally. However, when you place the order or when you identify your specific buy point, the stock doesn't reach your buy point, or it reaches your buy point, but then it starts to slip back. Okay, which means the market is not validating your opinion. The point that you have identified on the chart is nothing but an opinion, okay, based on your technical and fundamental analysis. But unless the market confirms or validates your opinion, it is premature to be a part of the trade. This is the moral of the story of the first chapter of Jesse Livermore's book, How to Trade in Stocks. That is why Jesse Livermore, who used to trade the stock market back in the 1910s or 1920s, that is why he's called as a pioneer or a legend. He understood the pulse of the market. So this video is an example of a scratch trade where I tried to take position in the same stock twice, but I was unsuccessful because the market is not supporting me here. So this is computer age management services. Let us go through this stock. Why was I considering this stock? Okay. So let me first open this. I click on consolidated. So have a look at this: 17%, 20%, 38%, 41%. This is called as accelerating earnings growth, quarterly basis. Then you have 2%, 10%, 13%, 19%, 25, 27. Again, accelerating quarterly sales growth. So both on earnings and sales level, we have accelerating growth on a quarterly basis. By the way, this number is calculated by taking June 24 number and comparing that with June 2023 number. Okay, so 15.58 goes to 22.01. That's a 41% growth. Although the number is quarterly, but the growth is measured annually. Okay, that is how these numbers are coming. So you have accelerating EPS growth, you have accelerating sales growth, which is exactly what we want. Plus the return on equity is 39%, which is more than 17%, which is our minimum criteria. So this stock is a stock which is ideal for positional trading. Okay. So if I were to buy this stock, as long as this stock remains above the 50-day simple moving average, I would love to hold on to this stock. Okay. So fundamentally, this stock looks strong. Next, if you look at the annual, see 2017, the EPS was 21.51. 2024, it is 72.06. That means the earnings per share have more than tripled in this stock. So even on an annual basis, the earnings per share has gone up significantly, not just quarterly basis. If we look at the annual sales, I scroll down, annual income statement, look at this total operating revenues. From 641, it has gone to 1136, and every year it is increasing. So sales is increasing, earnings are increasing, sales are increasing based on both quarterly and annual basis. And same is the case with earnings. Both are increasing on a quarterly and annual basis. Return on equity is 39%, which is more than 17%. And What about margin? Margin, is it expanding? Of course, it is expanding. Look at this. In 2012, the margin was 18.53. Now it is 30.88. Has the margin expanded? Yes. Sales are good. Earnings are good. Margins are expanding. Return on equity is high. All four factors are in our favor. What else do we want? Now we only want to look at some technical factors. For technical factors, you have these numbers here. See, master score, anything above 60 is good. Master score basically is a score given by MarketSmith to a particular stock based on its fundamental and technical factors. Okay. Anything above 60 is good. EPS rating obviously is going to be fine. Price strength is 75, which is decent. No problem. Accumulation distribution rating is A plus, which means it has got institutional demand. Price is near 52-week high. This is the 52-week high. The 50-day moving average is above the 150-day, and the 150-day is above the 200-day simple moving average. So it's a nice stage 2 uptrending stock. Long-term EPS growth rate is 22%. Group rank is poor, 86, but that's okay. Out of, let's say, 15 factors, if one factor is off, should not make a big difference. Okay. PE ratio is near the higher end of the 5-year PE range. Okay. 27 to 79, and the current PE is 57, which is good. Earnings is stability. The smaller this number, the better. Okay. Management ownership is not there, but we know that this company is owned by funds. This company provides services to mutual fund companies. Then every quarter, the number of funds that are holding on to this stock is increasing. It has gone from 234 to 383. Up down volume ratio is 1.3, which means the volume when the stock goes up is bigger than the volume when the stock goes down. Okay. Yield is okay. Book value, I don't pay much attention. Long term debt to equity not applicable, which means the company doesn't have long term debt. Alpha beta are not that important. Okay. So we have looked at all the ratings. We have looked at the uh, trend of the stock. Even you look at the consolidation here. Okay. If I click here, it says pattern consolidation stage 2, which means the stock is in early stage. We are not buying the stock in late stage or middle stage. We are buying it in early stage. Even the relative strength line doesn't seem to be falling. It seems to be going flat. Okay. So everything looks fine. Only problem is the industry rank. Now I will show you where did I buy the stock and why did I get out. So finance, this is the industry. So finance investment management. See, current rank is 86. 6 months ago, it was 28. So the rank, industry group rank has worsened. That's a negative for this stock. But I ignored that negative because all the other factors were in our favor, especially the fundamentals. Now let us go to the stock. I will show you where did I make the 2 attempts to buy the stock. CAMS. Okay. So these are the ratings that are at master score, earnings strength, then price strength, institutional demand, then the industry group rank, earnings growth, sales growth, return on equity, then the base count, and this is the second base, and 6 is the number of points in the base. Okay. So this is my shorthand way of writing notes. So my first purchase was on this day, 16th of September. Yeah. So if we look at this base, so blue, green, red, so it's a nice stage 2 uptrending stock. Then if I draw the base for you, 1, then 2, 3, 4, 5, 6, 7. So 7 points in the base. I want minimum 4 points in the base. 7 points means there are 3 contractions in the base. 1, 2, 3. Okay, if point number 8 completes, then there will be 4 contractions in the base. And as you can see, the volume inside the base is contracting. So you have price contraction, you have volume contraction. So in this case, 1, 2, 3, 4, 5, 6, 7. So point number 5 becomes my buy point. So my first purchase was here at the high of one of these two candles. Then look what happens. Now here, the price breaks that yellow line, which means I buy the stock. However, on the same day, I decided to cut my position to half because I am not getting volume support. What do I expect the stock to do on this day? I expect the stock to go up, close above the yellow line on high volume. That is called as a high volume breakout. Remember, step 1 is a high volume rally. Step 2 is a low volume consolidation. And step 3 is a high volume breakout. But in this case, I got the breakout, but I did not get high volume breakout. That is the reason why I put 5% position size in this. But then towards the end of the day, just 5 minutes before the close, I cut half of my position. Now, why did I cut half of my position? To control risk. Okay, because my stop loss is at 8% below this yellow line. Somewhere here, my stop loss I have kept, which is 8% below the yellow line. Roughly somewhere here. Okay. Now, why did I keep the remaining half? To see whether the stock gives follow through. So I give the stock a couple of days. See, absolutely no follow through. So on this day, I sold all my remaining shares. So which means I did not lose money. See, this is how I control risk. On day 1, I cut my position size to half. So my total risk is not 8%, is already 4%. Okay. And then by the time these two candles came, I sold the remaining half, which means I actually came out at a very tiny profit here. However, now that I'm out of the stock doesn't mean that the stock has lost its charm, okay, or the trend of the stock has ended. You see, the trend is still active, the trend is still there, the stage 2 trend is still there, the stock is still forming another basing area, another buy point. Okay, so see, sorry, point 1, point 2, point 3, point 4, point 5, point 6. Okay, so now the base, the buy point is, the setup is becoming even better. Okay, earlier it was, the yellow line was below, now the yellow line is even higher, somewhere over here. So let me remove the, yeah. So at the high of one of these two candles, I placed my order. Sorry, I did not place my automatic order. I placed my alert there. And on this day, okay, I waited for 2 days, nothing happened. On this day, it finally triggered my alert. So I bought the stock. But look at the shadow. Look at the upper shadow of this candle. Okay, this is called as a high volume breakout. However, this candle represents supply, it does not represent demand because of that long upper shadow, which means what? I bought and I sold on the same day, because if I am not getting what I want to see on the chart, I am out. So first attempt was unsuccessful. Okay. The second attempt, I tried to get in. If this stock had closed near the high, I would not have sold, because I am getting follow through from the price and I am getting follow through from the volume. In this case, there was only volume but not price action, which means there is selling pressure. And if there is selling pressure, I don't want to be party to this stock. Okay. So I have made 2 attempts. Okay. On both the attempts, I did not lose money. I ended up coming out with 0.02% profit on a 5% position size. Still, if you see, if I convert this to a bar chart, still you have price tightening happening here. The pattern is still intact, by the way. Okay. There is nothing wrong. The trend of the stock has not changed. It's only that the buy point is not uh, working in this case, probably because of the industry rank. Because 50% of a movement of a stock is attributable to the strength of the industry. And we have seen that the industry rank has declined from 28 to 80 in the past 6 months. So, probably the weight of the industry is not allowing this stock to go up, in spite of the fact that this has got some excellent fundamentals. Okay. So I keep an eye on the stock. I might buy the stock again if the setup improves on the right side. But if it begins to fail, then the stock will automatically go off my radar. So I hope you liked this video. I have done a detailed discussion of the technical and fundamental factors. Please like, comment, and share these videos so that this kind of videos will reach those people or those like-minded people just like you who want to become genuine professional stock traders. Okay. So this kind of information must reach them. For that, I need your support. So please support this channel. Thank you so much for your time.